Hi, everybody. My name is Rita Crompton. I am the Inventor lady and also host of Invent America radio show. If you would like to hear us on the radio, please join us every Saturday afternoon or go to the website and pull up some of the topics that might be relevant to you, depending on where you are in the process. Tonight, we are doing something really different. We've got a guest speaker, and when I met one of the ADP guys at the ASD Market Week, way too many letters there. But, when I thought, and they told me about the fact that there's an R&D tax credit that most inventors can use. I figured, oh, that's got to be a scam. There is absolutely no way that that can be true. And I came back and I did some of my own looking around, and by golly, it was true. So then we got somebody on the radio. Michael, I think it was you who were on the radio, right?
Yeah, that's correct.
Then we decided, all right, well, we need you guys to be able to ask questions. We need you to be able to hear directly from him. What does it mean to be able to take advantage of the R&D tax credit? So I am really happy to present Michael Smith. You're out of Indianapolis, right?
I'm actually out of Atlanta.
All right, you're out of Atlanta. So. I lived in Marietta for a few years, so kind of have an idea of where you're at there. But anyway, thank you so much for joining us tonight. And we're going to let you take it away. I will watch for people to come in, see who's got questions that they want to ask. And so if I interrupt you, it's to let you know somebody wants to ask a question or what the question is. So everybody, don't be shy. I don't know about Michael, but I hate it when I end up doing the talking for the whole meeting. So we do like you to participate. Otherwise, if you look at your watch, I'm going to ask you the next question. So anyway, Michael, you get to take it away, and I'm going to admit people.
All right, thanks, and good evening and good afternoon, depending on where you are. So thanks for having me, Rita. We're going to talk about the research and development tax credit. So I'll try not to get overly technical. The credit has been around for quite some time, but there's been some changes, and ADP Legal always makes me say, this isn't legal advice. This is certainly not the final word on today's topic. It's not a political opinion. And again, we do encourage you to, look at some of your, whether you're using attorneys, tax practitioners, CPAs, for additional guidance. So you can see I've been around a long time. I'm actually a CPA by trade and training. Spent nearly half my career in public accounting, but been with ADP now for over 12 years. So really focused the last 7 on R&D. So let's talk a little bit about some of the specifics. So again, all of you are inventors. Most of you, I think, have patents going on as we've been kind of going through getting introduced into the round table tonight. But the R&D credit actually started in 1981, believe it or not. So it's been around for quite some time. It was made permanent in 2015. And that's when smaller businesses, entrepreneurs, medium-sized businesses started taking more note of this credit. It is a tax credit. It's an income tax credit first, and I'll get into some of the specifics. But it's a way to encourage people like yourselves to go out and innovate, develop new products, bring them to market by giving you a tax credit, by returning some of those costs that you may be expending back to you. So again, it's encouraging that development and innovation in the U.S. It can generate some cash refunds depending on where you are in your life cycle of your business or businesses. And we do find many entrepreneurs may have more than one business or one legal entity. It, again, is income tax liability, but if you are what we call the 5x5 rule, meaning you've been in business for less than 5 years and have 5 million or less in gross receipts, and you have payroll, then you may be able to apply against your payroll taxes. A lot of small businesses do not have an income or income stream, let alone income tax liability. So again, this was really, clause was added in there in the 2015-2016 year to really encourage small startups and entrepreneurs to grow. So let's talk a little bit about what makes people eligible like yourselves for the credit. And again, some of you were kind of introducing yourselves. You're developing products. You could be developing a process or a software, maybe even a formula or a technique. So that permitted purpose. So whatever you've set out, you've identified, as an opportunity, and you've set out to develop it. That permitted purpose is the first part of this 4-part test. The second one, it says technological in nature at the top. That just means it's got to be in one of the hard sciences. So, is it physical or biological, engineering, or computer science? So one of the STEM categories, nothing like data content, things along those lines that are not truly of a hard science. And then really those last 2 categories that are up there, elimination of uncertainty and that process of experimentation, I, in my mindset, always consider that to be kind of one and the same, even though it's broken out. But really, what is your new product? What is it? Is it some new capability or method or design? And then lastly, what's your process of experimentation? How do you know what you've been working on, your permitted purpose? How do you know it's ready to go to market? Maybe ready to file a patent, maybe ready for a trademark. And by the way, patents and trademarks are great, but they're certainly not necessary to claim the credit. This is an activities-based credit. It's rewarding companies that are investing, expending costs to create, to directly develop, to maybe supervise some development. If you've got contractors or employees, or it's also to pick up and reward for costs if you're maybe doing the experimentation, the testing. Perhaps you're outsourcing that function to a third party and you're paying for a third party validation. All of those types of costs can kind of come together. And on this screen, again, that's just a summary of what I went through, but really wages. So if you're paying yourself a wage, maybe you're a partnership or a sub-S or an LLC, and you're taking a guaranteed payment on your K-1, that could count towards your wages. And again, those costs are, you're kind of rewarded, if you will, 6 to 8% of what you're investing. Again, a lot of small businesses and entrepreneurs may leverage contractors, 1099s. Maybe you're doing something that's kind of specialized and you found a firm, a third party to do part of the development for you, and you're paying them. You've entered into a contract. That contractor expense could be picked up as part of the R&D calculation. Next is supply. So anything you're consuming. So maybe you're building prototypes. Maybe you're building 1, maybe you're building 10 prototypes. Anything that's kind of, tangible, non-capitalized, so it doesn't include equipment, but anything you're using in the process of your R&D exercise could possibly be a supply and qualifying. Lastly, I do kind of break this out, cloud computing or hosting costs. So if you're using, like an Amazon Web Service, they have an R&D environment. If what you're doing is what you're developing is needed, maybe on a CAD, or maybe you're writing software actually, that type of cost and that R&D environment, that cloud computing could very well be a cost we could pick up. The goal would be to create a credit by having all of these costs. So the larger the cost buckets, the larger your credit is. And again, there's a lot of things we can do to help you as you're building out your product, your business. You're going to be expending costs, to help you get to that point so that it's not a lost cost, so that it actually kind of provides that payment back to you, that 6 to 8%. Any industry can qualify. The typical ones, again, these permitted purpose is things that's if you're creating a product, could be a manufacturing process. We do see processes in some other industries, obviously an invention. All of you are inventors. Maybe it's a technique. So maybe it's not just a product itself, but it's an overall technique that's new. That could be something that qualifies. Also a software or a formula. Again, any industry can qualify, but typical industries tend to be kind of in the software or the biotech or the manufacturing or the pharmaceuticals. But again, we've seen a lot of examples. I actually had, for instance, a security firm, that provided security personnel at various locations. They actually saw the need to have an app. So they actually engaged with an app developer to create an app to help manage those employees and that security personnel. And then that led to they started adding on functionality so that their customers could be invoiced and the customers could pay via the app and so forth. Again, a qualifying activity for kind of an atypical industry. Another atypical industry had a dry cleaner during the pandemic, could not get their own cleaning supplies. And so they started developing a green-friendly cleaning solution that actually led to a patent. And now they're actually licensing out that cleaning solution to other dry cleaners. So again, things that you don't think about, atypical industries, and the credits are kind of there and they're able to recapture part of that cost. Some industries that we see the IRS kind of push back on, things like contractors or construction or plumbers or installers. Now, construction, sometimes people roll engineering into that. So I would say kind of separate engineering out. Same thing with architectural firms. There's been a recent tax court case, the Harper case, that is actually settled in favor of engineers and engineering concerns, saying their design were in and of themselves, for the most part, a research and development activity. Compounding pharmacies, people kind of call that designer drug. So it's something that's just kind of a mixture that's made for a particular person. Those typically don't qualify. Catering companies, graphic design and marketing. Again, data collection, data analytics, many times do not qualify. So they just have a hard time achieving it. But I'll go back to my original statement. Any industry could potentially qualify if they meet this 4-part test. Here are some examples, and we'll make this presentation available. But as you can see, it doesn't take a lot of employees to deliver a decent credit. You look at the video game developer, for instance, they had 20 employees. They generated $141,000 in credits over a 3-year period. You got that biotech firm. We see a lot of this in the life sciences. We see a lot of interest since the pandemic in the vaccine development. A lot of people looking to develop therapeutics or ways of treatment. Actually recently had a chiropractor. Again, you would not necessarily think, what is a chiropractor doing? But he has actually developed a new method of treatment, and he was able to get a functional patent for that method of treatment. Again, patents, trademarks are not a requirement, but they can facilitate being sure we capture all the cost. There's reasons why people say, they pass on the credit. And again, it started in 1981. People thought, oh, this credit's for, the large companies, whether it's an Apple, a Google, a Ford, a GM, but really small businesses every day. This is also, by the way, if I didn't mention, the single largest federal credit that's offered by the IRS. Over $15 billion every year is documented and secured by companies across the U.S. for R&D credits. That being said, only about 1 in 3 companies take advantage of the credit that's actually eligible and have cost. So there's a lot of people that are doing R&D, that are innovating, creating, and they're not seeking the benefit for one reason or the other. It could be things like, we don't document our work. Well, everyone has a business plan for the most part. Everyone has designs. You may have emails back and forth, texts back and forth. You're interacting with different people. There are documentation. You just don't think of it in that way as being documentation. We don't track our time. Most entrepreneurs and serial entrepreneurs actually, are spending a majority of their time. If you're spending 80% or more of your given time in a year, we're allowed to take 100% of your cost if you're paying yourself a wage, or if you're a contractor, or if you have a guaranteed payment. We're able to take all of that and include that in the credit calculation. A lot of people think they don't qualify because their activities are not necessarily innovative or groundbreaking. But if it's new to you and could be considered new to the market, it doesn't have to reach those thresholds. Then could very well be a qualified activities. Also, again, a lot of people don't realize that this does apply to those flow-through type legal entities like an S Corp, a partnership, an LLC. They think it, again, only applies to these large companies, like a C Corp, again, like a General Motors or a Ford or Chrysler or so forth. We aren't profitable. Again, it's kind of marketed out there on the IRS side as an income tax credit, but there is a payroll offset. And I'm talking at the federal level. If you get to the state level, 37 states offer some form of R&D incentive. Some of those could be given back to you in cash. Some could be sold to a third party for like 90 cents on the dollar. So that creates a monetization as well. So there's a lot that's in there, but these are just some of the reasons why people may pass on looking at this particular credit. I won't really go through the court case. I did, since I already touched on that, Harper, just say, again, typically engineering firms and concerns were kind of in a gray area. A lot of times we felt like they didn't achieve it. But the Harper case really said, hey, if you're doing a design, you don't have to be doing the actual construction. Your R&D is that design, that standalone, and so forth. Some of these others just talk about experimentation, about breaking up. You don't have to look at the company in entirety. You have to look at the activity to see if it qualifies as well. We can go through some of the breakdowns, but Rita, does anyone have any questions? Because I kind of like people to get a little bit more interactive, and get into a little deeper.
So let me start out with a question. All right. Most of our inventors, most of the people here, they haven't necessarily set up a business entity yet.
Right.
They're going to have expenses with engineers predominantly. Yes, as far as I know, everyone, has filed a patent. So if their patent hasn't issued, their patent pending. But they've worked with a variety of engineers to do their prototypes. I certainly know that Wendy has, Andrea has, Rick and Darren have. So I would imagine that, William has. And so, as you've worked with these engineers, is that work, research and development, we're looking at, all right, research on, do they have something new and novel? And then development, is that predominantly, because I think most everybody has worked with engineers that were considered a private contractor.
Right.
I don't know of anybody that's got an employee, and I don't know that anybody's actually got enough income to pay themselves.
Right. Yeah, very typical question, and thanks for kind of bringing that up. So again, a lot of small businesses that are starting out are kind of leveraging those third-party contractors, and they're either paying them in some way. Maybe they're paying them multiple types of costs to kind of cover. I don't know many contractors that are doing it free, but some may be. You know, but again, you're in a great place. Like I know, for instance, like Darren, you know, mentioned that, you know, that they've been working, they've got a patent, you know, so the question would be, you've just now achieved kind of, in my opinion, the first threshold of the R&D process. But once you get ready to go more commercial, you're also going to have additional maybe modifications to your product. You're going to have additional enhancements. You're going to get more feedback. And those costs as well can be included into R&D. Also, again, don't always get into it, Rita, in a conversation like this, but if you have secured maybe an angel investor, if you're looking at that, maybe you've applied for an SBIR grant, maybe an NIH grant to cover some wages or costs, some of that seed money, some of that sometimes, you know, you do end up paying people with that, or buying supplies and whatnot. Some of those costs could very well be included in the credit. So, you know, you're having a good time, you know, to kind of think through where you want to go from here.
All right. Well, Darren's got or Rick, I'm not sure which one of you's got your hand up there, but one of them has a question.
Yeah, I just wanted to piggyback on that a little bit. On slide 9, you said that there they kind of frown a little bit on marketing firms and stuff like that. We're not a marketing firm, obviously, but would this go towards marketing? That we do our own marketing, like we travel to trade shows and we bought these huge banners and displays and stuff. And also, there's that, and then you can see in the background there's all these 3D printers that we bought for this. And you said those would be things that would not be included, not machines like that, but maybe the filament and resins that we use in it, if I understand you correctly, consumables and stuff like that. But you know, like the reason I jumped in is she said, you know, I am the engineer, so we're not paying outside engineer. We paid for these out of our pocket, but those are not part of this. But we have other tax credits for that. But we don't. We have not made a profit. We're still in the design phase. We don't have a product that's for sale right now.
Right.
Well, it's kind of like excluding a lot. And maybe you're getting to it because you're probably not even close to done here. But I mean, it seems like it's getting narrower and narrower as you're talking.
Yeah, no, but you bring up a good point. Again, a lot of entrepreneurs like yourself start out, they have an idea, they develop it, there's a lot of sweat equity, for lack of a better term, you know, in it initially. But then as they're getting to the idea, y'all are probably a little bit more advanced because you secured one patent, right? But you have bought some materials. You know, maybe your next step, I don't know, is that you're going to get maybe some form of angel investor or seed money or grant to go to the next level. Maybe you're going to have different variations of the product that you've already secured. You know, maybe the cost of actually going to an event and kind of presenting your product is not a qualifying cost. However, your time, if you were paying yourself, for instance, and you're gaining feedback, maybe you're gaining actual feasibility for modifications or for more products, that cost and your time while you're doing that technical understanding could be included. Does that kind of make sense on where the costs could come from? So
I think you need to start paying yourself as the engineer. And then you can write it off as your research and development. I know that, you know, like Rick and Darren, okay, they want to be able to license their intellectual property, so somebody else going to make it, sell it, and send them a check. But they are fine tuning now their prototype to be able to get it out there. Wendy did a short run. She's getting ready to pull the trigger on having 2,000 of them sent into the Float No More, sent into the country. I think they're manufacturing. Wendy, where is John manufacturing?
China.
They're manufacturing in China. So, you know, yes, she's in there. She had a contractor, you know, a manufacturer in Denver, and she paid him, and then she's getting product in. But she also is looking for licensing. She wants to do the short run and then be able to license. Andrea does too. Bill has got inventory that he's working on getting a short run, what we refer to as a short run.
Right.
Generally, a lot of they don't want to become, the business manager. They want to be able to license it and let somebody else do the heavy lifting. But in the meantime, all right, they've spent a ton of money
Mm-hmm.
to get it teed up. And I know that, if there's any place where they can get a few bucks back, that's what we're here for. I'm not sure. Maggie, would you introduce yourself? You didn't get a chance to. Where are you in the process?
Hi, yeah, thank you. I'm still a little baby inventor. I'm just kind of figuring out where I'm going. But this has all been really interesting information because of course I'm developing the product and I can see maybe what I might be able to write off my taxes. So thank you.
I would say almost everyone that we dealt with has started out as a 1 or 2 person endeavor, right? With an idea. And even if you're going to license it to another party to manufacture or sell, again, more times than not, obviously the intellectual property stays with you. And then you're going to get, as you go to market, this is just a natural evolution I've seen, you're going to get feedback, you're going to get additional ideas to enhance, improve, maybe make a tangential type product. And that effort and cost, again, could be picked up as far as your R&D time and expense. And you could get, again, an income tax credit for it, possibly a payroll credit if you're starting to hire employees. And again, we see a lot of grants. We see a lot of private equity money, depending on where you are in the landscape. So you're actually, all of you, as I kind of understand, you're kind of at the forefront. So you have some patents or patents pending, or you got a great idea. And you're not quite yet maybe established on the business legal entity side, which is fine. But this is, I think, great information, a great time to think about this because of the rapid nature of growth, if you will, from where you are and where you may be in 6 or 12 or 18 months. So,
Michael, why do more inventors not know about this? I mean, when we heard about it at ASD Market Week, I'd heard of the R&D,
right.
Tax credit before, but you're always thinking that it, manufacturers, spaceships, new computers, new hospital stuff. We don't think about it on a fishing gadget or a kitchen gadget or, dog care. So what we're looking at then is, this has been around for what, 45 years?
Right.
Basically. And why do more inventors, these early stage, small independent inventors, not know about this?
Right. Yeah, that's a great question. And I don't really have a great answer other than, the history is that, people think R&D manufacturer, they really think automobile manufacturers for the most part. This is what started. And the other side, so they don't think it applies to them. The other thing they think, yeah, I'm creating a product or a process, but they don't view it as something that's truly innovative, or something that could qualify. So this is, again, an activities-based credit. So again, most of you, I've never seen anyone with a patent not qualify for the credit, to be honest. You don't have to have a patent because, again, it's activities-based. You don't have to be an engineer. It's definitely great that you are, but you don't have to have certain credentials in order to qualify. And people don't realize too, Rita, that, again, there's facets of their development. It's one thing to have a product. It's one thing to maybe have a 3D printer, but then how are you testing it? Do you need to, or have you just sent it to a third party and maybe paid someone $20,000 to test it for you, to have a third party validation? And they don't realize that, you could get 8% of that back, or maybe a couple $1,000s as a credit because you spent $20,000 in a testing phase. Different people maybe do different iterations of prototypes. I've seen people usually they do 5 or 10, sometimes they do 100. So
I think for some of our inventors, especially like Rick and Darren, where they've been doing a lot of their own development and testing. I've got another inventor, lots of inventors, and one of the guys I was telling about this, he said, I'm going to be calling my accountant. And I said, your accountant most likely doesn't really even know about it. Or he would have told you when you were out there, taking and looking at your deductions. And he goes, okay, who do I contact? So, we've started giving out, the contact information for you guys.
Mhm.
And a lot of it is just because nobody knows how to use this from, it's one thing our inventors don't know, but it's another thing when, their accountants and, bookkeepers don't know.
Right. Yeah. And as you know, as a current CPA that holds a license that's been in public practice, this is for the small to medium-sized accounting firm or tax practitioner. It's usually beyond the scope of what they're doing. And because this is a lot of detail and people kind of get, if you read it online at irs.gov, you would say, oh, I never qualify, or no, I can't, do all this. But there's actually a method. There's a lot to it. And so a lot of smaller firms kind of shy away from it, or sole practitioners. But again, it certainly started gaining traction for the small business community in 2016 when it was made permanent, and people didn't think it was going to expire. You didn't have to worry about all these kind of odd calculations from the 80s, because most people were not around in the 80s. And they don't realize that, again, maybe if they're going to self-fund it, they self-fund it by paying themselves and claiming a credit, So there are some ways to do that. You don't have to be an ADP client. This is a standalone product that we offer in a service, and we like to partner with your, tax practitioner or your CPA or advisor.
So, well, and we've got, with the guys like Rick and Darren, sorry, you guys are at the top, so I'm going to pick on you. And, where their patent is issued, it means they've been working on this for a while. How
Right.
do we go back and take advantage of some of this?
Yeah, so there's again kind of another court case that
That was
says,
literally my next question, by the way.
Oh, who's got the
Sorry,
question?
that was literally my next question.
Okay. Good.
so
Read your
we
mind.
right, so we do a process. So there's a court case that establishes years and years ago that says oral testimony is a valid submission to substantiated claims. So we go through what we call, as many service providers, a technical discussion. We'll walk you through the, kind of the details of what R&D is, what does direct development mean, what does direct supervision, what does supporting activities mean, and even what non-qualifying activities, so you can know that. But, the IRS, again, part of this court case, and the general rule is that you're allowed to assign a percentage of people's time while you are developing, creating, innovating. That could be for some, as little as 5 or 10%. It could be for others 100%. And many small, growing entrepreneurial businesses are, in fact, devoting most of their time to development. It's not uncommon for us to see 5 and 10 and 8 person, software companies. Everyone is writing code and logic, or they're testing it. Therefore, everyone's salary and cost gets lumped into that bucket. We see other kind of, manufacturers, that are like 12-person firms, and there's 3 people in it that are constantly doing a great deal of R&D activity. Because they've launched a product, they've discovered a new way of doing something, or they're modifying another one. It may only be $100,000, $200,000 a cost, but all suddenly that becomes a $15,000 credit.
I'm thinking that anybody sitting here at this meeting, if they had a $15,000 credit coming back to them, would jump up and down and dance on the table.
Right. And if you're structured as an S Corp or an LLC or a partnership, that actually flows through onto that K1 that you get. So if again, you may be eligible if you've got employees or have employees in the near term and you start the legal entity, you may be able to offset that 6.2% payroll tax that you'd have to pay to the federal government with the credit. You can carry the credit forward 20 years if you need to, but we try and help time it with companies and businesses so they can actually see that benefit, in the first year that they claim the credit.
All right. So, Darren, Rick, one of you have a question?
I just was agreeing with you. Said I would jump up and down for $15,000. That was me.
Yeah, that
Oh,
wouldn't, I
okay.
mean,
All
we're,
right.
we're
All right.
spending, we're spending 30 to 60 grand a year on this out of pocket. So
Right.
This is
Okay,
great
so
news.
that leads me to my next question. How do you, Michael, help someone structure their bookkeeping then to say, okay, I know you guys have been doing a lot of this yourself. Let's go back and take a look at then, at least going forward, if you are looking at then a credit to yourself, that you've been spending this kind of money, and if you had hired an outside contractor, I know that Bill Holly had hired an outside contractor. So he was paying invoices to, a manufacturing firm, whereas, Darren and Rick have been doing a lot of it themselves. How do we get that to balance out so everybody then gets the credit?
Yeah, each business is a little bit different. Classification is not necessarily absolute to claim the credit. It is helpful. We do work with your CPA or your tax practitioner to say, hey, if you got these costs and you have that flexibility, maybe you want to, consider, again, paying yourself a salary or taking a guaranteed payment or paying that contractor, a cost, and we're able to claim that. Maybe you want to, pay for the supplies. Again, the normal course of business, Rita, is like, people do sometimes go for grants. Maybe they go for seed money or an angel investor or, Series A or B, depending on where you are. And those grants, which again will provide some feedback, they can be written in such a way that it could say, hey, we'll cover some of the wages, we'll cover some of the supply costs. We're not going to take your intellectual property, that's yours. We're just here, to help you grow. And there's a lot out there, for that to help companies to get, from kind of the garage, if you will, to a more formalized business. Even if you're going to license it out, again, I'm yet to see someone that has released a product that hasn't, within 12 months or so, added a modification or an enhancement to it, or even have an idea for another one. And this is exactly what this credit is originally designed to do. It's to encourage and foster that type of creation and innovation in the U.S.
Well, I know that both Andrea and Wendy came back from the ASD Market Week with, making improvements to the prototype that they had there, that they had some really good suggestions. And Andrea then, her husband was there with her product, and it was like, holy cow, this is what we need to do with it. So, got that under the way. So, filing then some new intellectual property with that. Wendy made some changes to hers because everybody was like, when can I get one of these? And so she was after it. I know that Bill has gone kind of back and forth with his manufacturer because his is, it's got to be a very special size, weight, and depth. Bill, does that kind of talk about how specific you need to be with yours?
Yeah, I think so. And it's one of those things that's also fluid because a little bit of marketing research that I've been doing indicates to me that my product might be well received in a slightly smaller version. So yes, I think that does it. By the way, quick question, if I may.
Sure.
When we're talking about tax credits, my CPA tells me that I cannot write off most of the things dealing with intellectual property. If I take a tax credit in a particular year, can I also write off as an expense the associated expenses in that same time period?
You could be. There's been a law change, so some of it you may have to amortize over a 5-year period versus this immediate expensing deduction that many people are used to in the past. There is Congress has actually, not a political opinion, Congress has actually passed it on the House side to eliminate that need to do it over 5 years, which means you would take 20% each year for 5 years, and they go back to expensing it all immediately. Some small companies, particularly on the software side, will actually go ahead and capitalize that intellectual property into their software development to kind of increase the basis. So, it's again, it's a facts and circumstances as to whether you need to do that or you can expense it, in the near term, if that makes sense.
Not exactly, but let me take Bill's question a step further. All right. Most of our inventors will take a tax deduction, or they'll take as an expenses, creating the business. And so they'll use their deductions, they'll have a list of them. How is a deduction different than the R&D tax credit?
Yeah, so that's a great question. So deduction usually impacts your taxable income, anywhere from 20 to 40% you would get of that deduction. So if you had $10, maybe it impacts you, by $4 to the better. If you have an income tax credit like the R&D, it's actually a dollar for dollar reduction in your tax liability. So if you have, cost of, $100 and you're able to deduct $8, or you have an $8 credit for R&D, then you're able to offset your tax liability. Let's say your tax liability is $20. You would apply $8 against that $20, and you would reduce your tax liability dollar for dollar. So tax credits are always better than a deduction, if that makes sense.
So if you take the R&D tax credit for, say, like Bill, when he goes to the manufacturer, and he's got, they've gone through the different variations of the prototypes to get it just right. And so he takes that then as, the research and development, the R&D, in getting the product to a final stage. All right. So he takes the tax credit. Can he take the deduction too?
You do have to add back some of the costs associated with the deduction. But again, you're only getting about 20 or so % of that deduction as opposed to the tax credit. So you're still going to be better off with a dollar for dollar tax credit, the deduction.
Okay. All right. Well, I was just checking to see. Okay. I can't remember which one of you's got your hand up, Darren or Rick, but one of you.
Okay. I have actually kind of a two-part question, but the first one is, if I were to go to a trade show and I was to ask Rita to come with me, the expenses that I'm paying for Rita, are those considered part of the R&D, or how do I look at that? And secondly, because I'm asking that is because Darren and I went to like 5 or 6 different shows all up and down the East Coast. We had time getting there, time doing it, time getting back. When you say pay yourself, Darren and I have literally made no money. We have been a black hole pouring money into it for the last 3 years. So when you say pay yourself, how do I pay myself if I don't make any money?
Right. So, maybe if you're paying those costs, maybe you pay yourself that in a wage and you just pay the cost out of pocket from there. Does that make sense? Could be an option for you.
But is the wage then a tax credit dollar for dollar? Because the way if I understand the way you explain it, the way I did my taxes 2 years ago, last year, and this coming year, the money I'm spending, I'm only getting 20% or 35%, 40%, whatever. If I turned around and took that total number that I spent on things, said that I paid myself that, and then paid for that out of my pocket, I could take that total number dollar for dollar away from whatever tax credit I have. Or tax liability I have, correct?
Correct. And that's why we like to work with your tax practitioner so that we have the full view and let them kind of give the final word from a tax perspective, because we're not signing the tax return, even though I've signed, 10,000 plus in my lifetime. But yeah, there are ways to kind of structure, those types. So you've got expenditures, right? So, it's do you just pay, the travel, the airplane, the hotel cost outright just on your American Express or Massachusetts?
Yes.
Yes.
Or do you, take a wage, that's how the wage shows up on your tax return, and then you get the credit. So would you be better off just paying for the cost, or would you be better off having a wage and a tax credit? Does that make sense? And
Right.
so that's kind of the $1 million question. And that's why we like to have that consultation with your accountants and tax advisors and so forth.
Gotcha. Okay. Thank you.
So you kind of work with them.
Correct.
Okay,
Mhm.
yeah, that's good.
Yeah. So, and again, because everybody, we see many times people like yourself, they may start one company, they may have another idea that perhaps there's a reason, a business purpose to start a separate company. Maybe there are two different products that are related, but they're still unrelated. So maybe you do two different ones. Many of you, I know I've heard some, I think it was like Wendy, maybe, you're doing the development here, but maybe you're doing the manufacturing outside the country. This is a U.S. credit. So we just focus on the activities that happen within the United States. That could be some of the direct development. That could be like building a prototype. That could be the testing. It does not have to happen in its entirety in the U.S. We just claim what is qualifying in the U.S. Just as another point, it's very common now for in the life sciences, people develop a therapeutic or a new vaccine or a drug in the U.S., but they're sending it to Eastern Europe to be tested. Once they get it tested, they send it back and they go through the clinicals in the U.S. So, again, we just carve out what's occurring and what is activity based in the U.S., and that's what goes into the calculation. So don't let that concern you if you're doing things in multiple locations in the U.S. and outside the U.S. We just take what's in the U.S. and what qualifies.
Well, I think that, all of us, me and all of the inventors, and I'm hoping that you or, at least ADP will be there to help out. This is going to be a learning curve for all of us on
Right.
what makes the most sense, what we can do, all the different products, people in the different stages, some will qualify for more than others or on different parts. And so we want to be able to learn how to, kind of point them in the right direction and say, don't forget to do this. And this is the man to talk to,
Right.
so that you don't leave money sitting on the table. I mean, inventing is expensive and it's hard.
It is.
And, any dollar that we can get, inventors to be able to put back in their pocket is a valuable dollar.
That is very true. And we often tell companies, this is a good time. You're ready for the credit. You got enough costs. We've also told people, hey, here's where you are. Here's some information. We're going to call you in 3 months or 6 months and test and see, because they're getting ready to maybe hire more contractors or getting ready to hire their first or second employee, or whatnot. And this is good now because you can actually do a little planning and kind of maximize the opportunities because you're outlaying the cost, you're doing the activities, you're creating, you're innovating, you're doing all of this. So why not, spend a little extra time and do a little planning, so that you can see some of that benefit.
Well, and I think it's important that, if you can send me, a 1-page bullet points for a brand new inventor, because an inventor that's, all right, so if I've got, I'm looking at Maggie, who's just getting started, and then we've got Wendy, who's ready to pull the trigger on 2,000 units. Wendy can take a look at the sheet and say, okay, here's where I'm at, and this is what I need to figure out. Whereas Maggie says, I'm just getting started. I can do it right. So that's, if we can do that, and then we can post it and get our inventors, because we had a lot of inventors asking questions.
Right.
Darren, you got a question? Rick.
Yeah, real quick. When you say retroactive, how far back? We're only 3-4 years old, so.
Yeah, typically by statute, you can go back 3 years and amend the returns to claim the credit. So
we're right now.
doesn't always make sense to go back 3 years, but I will say 60 to 70% of our clients that we sign up do go back 3 years. So,
And then one more thing, we were talking about how we can avoid if we takes the credit versus the deduction. Like these machines, we amortize them over 5 years, 20%, but in 5 years they're practically worthless. In 3 years, we've been upgrading every year.
right.
So if we take the cost of all that stuff, have it here, and we take a salary from the company equal to that number,
Right.
and then pay for that stuff out of that salary, we can take a dollar per dollar tax credit instead of 20% of whatever that was.
Correct. Yeah, you basically would be paying yourselves as opposed to just paying for the outlay, right?
Gotcha.
Right.
Yeah.
And again, want to be sure your CPA and tax practitioner is agreeable to that, but there's a lot of precedence for that. So, because a lot of people just, again, they, these are all rules. This is all in the Internal Revenue Code. But they're like yourselves. They're just kind of spending it out of pocket, not realizing this could be an option. So they're just, I need a 3D printer. I go buy one. Here's my American Express number. Send it to me. So, sometimes people maybe they just pay to have the 3D printing done elsewhere. And maybe that cost is included versus you actually buying the equipment. That could be an option too. So,
Yeah, we know that, things have got to be set up correctly, but if we can help the inventors set up sooner rather than later, so they can say, I'm going to be doing it this way. And you say, well, if you set up the paperwork like this, then you will get the tax credit. Otherwise, all you get is maybe a deduction. But the understanding what those points are. So, like I said, if you can send me, a 1-page with some bullet points on it, and I can go through and say, all right, new inventors, this is where you're at. This is what you want to consider. And, that will at least give them, a chance to get set up correctly. And then when they say, all right, go to your, your CPA, whoever's doing your books, make sure that you're set up properly sooner rather than later. It's easier to do it at the beginning than it is to back up and try to redo some paperwork.
Yeah, we actually do have clients many times like, they're starting to hire people and they have decisions. Should they hire someone as a contractor? Should they hire someone as an employee? And so you can run some of the modeling and see if it makes sense. With the contractor, you get to only count 65% of their costs, as opposed to employees, you could take 100% potentially of their wages. We have some companies that maybe they're doing some things in the U.S., maybe they're doing some things outside the U.S. And again, they look at the cost differential. I would never say do something just to do it for credit, but I would look to see if all things are equal. If you're doing it this way, do you get an income tax credit? Or you're doing this way, you don't get an income tax credit or potentially a payroll credit.
All right.
So, so it's great to look at those avenues.
You can see names and emails. Then, guys, off on the screen there. Cody is out on parental leave right now. He would be the main go-to guy for just asking questions and getting this set up. You can do the adp.com. There is a link there where you can just read more information if you want to. Asher right now is your main go-to as far as, finding somebody that can, talk to you directly and help you get set up properly. But I'm sure if you randomly emailed Michael, he's going to point you in the right direction as well.
Yes, I will.
So, Michael, thank you so much for being part of this tonight. I am sure that we are going to be sending people to ADP for a long time. Before you guys start logging off,
Thanks, Mike.
if anybody's got, thank you, Maggie. If anybody's got any more questions, we're going to give it one more round. And I need 2 of you, and we've got a very specific topic for radio on Monday. Rick and Darren, are you available to do radio Monday afternoon? And Wendy?
Yes.
Afternoon or evening? Well, what time?
It would be after. What time zone are you in?
Eastern.
You're Eastern. Okay, it's going to be right around 2:15 Eastern time.
You know, if
I'm
you're,
good. Yeah.
I think I am. I can be available if, yeah.
All right. And Wendy, you would be first. You'd be right about 2 o'clock
On Monday,
on Monday.
I actually have my real job that I actually
You
pay
have a real job?
to collect to pay for my invention. I have a call at 1:30 to 2:30
All right. All right.
Central Time.
You know, let me see if Chris or William are willing to do it. The very specific topic is that you've changed from your original prototype. Andrea, you could do it too.
Oh yes.
Whoever raises their hand first is what I'm going to need. That, you know, after a show, you changed your prototype. So
That's a good one.
you know, we're talking about you got to make changes, and sometimes after you go to show and you go, oh, let's do it this way. So whoever can, Maggie, you're a little bit early, but we'll be getting you on the radio as soon as you're ready. Chris, I'm not quite sure where you're in the process, but if you've got patented products out there, I'm sure you went through multiple layers of prototypes as well. So it's how you get kind of started, and then you go, oops, we need to make a change.
You know, if I'll answer that very briefly, a lot of progress was made through 3D modeling. I use SolidWorks, and that works out the entire geometry, and it shows like functionality, and you can tell how strong things are going to be and whether it'll work there a lot of the time. So I've just got the first prototype up and running, and I'm testing it out.
All right. So anyway,
Can I piggyback that real quick?
What's that?
Can I piggyback this topic real quick for the radio?
Absolutely.
We're in that stage. We are getting our final patent in a month. We're at that stage where we satisfied all the criteria, and I don't know the steps, but we have like a month where we can make from our original. We had the utility patent. Now we have the actual patent. To where we can make adjustments or change anything like a mechanism that, you know, maybe we didn't make changes. We can do it now for free before it actually comes in. Would that be a part of this conversation as well? Because it's time sensitive as far as patents.
Well, we're not going to be talking about, you know, details you don't want to put out there. What we're going to be talking about is your evolution of your prototypes.
Yeah, we can do that. Yeah.
Yeah. And that's what we're going to be focusing on is, you know, how you go, aha. And you've got to be courageous enough to say, yes, I will change because it's going to be better if I change.
Yeah, we're right there. Yep.
All right. That's what I was listening to everybody talk. I know where you're at.
And I think William said the same thing. Ours is the same. He said his would be more marketable if it was smaller. That's the exact same thing we're doing.
Yeah.
Yep, absolutely. So, all right, guys, thank you so much. We try to keep these pretty close to an hour. I am grateful to see all of you, and we did record this, so we'll be able to get it out there. And if anybody has got questions about this, you know, as far as your particular details, you know, if you didn't get the contacts or whatever, you can always shoot it over to me. I'm happy to forward everything on to the right guys at ADP. And if you have any questions in the meantime, give me a call, shoot me an email, whatever it takes. Thank you so much again, Michael, and thank you everyone for being with us. And I will talk
to you, everybody.
Several of you.
And
Rita, I appreciate it.
Rita, thank you so much for putting it together. I know it takes a lot of time and a lot of effort. Good night.
Well, it was nice to see you and everybody else. So anyway, take care, good luck, and let's get some money back.
Bye-bye.
Bye.
Bye-bye.
Hey, Rita.
Yeah.
Hey, I have a question. I have a friend. He's a local guy here, and he's a budding artist, and he's a musical guy. Has his own. He's been doing it for about 5 years. Makes a living at it. Has got some movie credits to his name. But he's branching into jingles for companies. You know, companies that need to do the ones like the marketing out there, and they're like, well, we need a jingle. Who do we go to get a jingle? And he asked me to ask you if that would be, if that's a service that you provide to the people you represent.
If they ask me, I will send them to someone.
So if he, you know, if I can get you guys together and you can have his information, if somebody needs it, you can send them to him.
Right. Because, you know, most of the inventors that I'm working with are pretty early stage, so they're not really
Right.
looking for jingles, but they could be looking for, some other creative work that he may be willing to do. Now, if he's just looking at jingles, like I said, most of them they're like you guys. You're not ready for a jingle.
No.
No,
Um,
no, yeah, no,
but you never know. But if I get somebody that's, on the, maybe we do a radio show at some point and we get him on as a guest and says, this is what I do.
right. There you go.
So yeah,
Okay.
you
And
know.
then, and then not to keep you, I know.
I know it's late. Yeah.
We was talking about, if you outsource engineering or whatever, which we do everything in-house, but we did hire a guy. He has a full-time job, but the electronics are so small that Rick and I cannot solder them. And this guy has a microscope and he does all that. So we paid him $60 per prototype to do the micro soldering with the chips. But he doesn't want to, it's cash. He doesn't want to claim it on taxes. There's no way to recover that because there's no paper trail, right?
Yeah, I mean, you've got to be able to show that hold on a minute.